All right, we're here with Capital 10X. I have Stephen Stewart, CEO of Orefinders. Stephen, thanks for joining us today.
Hey, Evan, thanks for having me.
So today we're just going to be discussing junior gold miners. Obviously, gold price has been soaring recently for a lot of different reasons, but really we want to focus on the investment opportunity presented by the junior miners themselves. But first, Stephen, I'd love to hear your take on gold itself, price, where it sits, but more importantly, where you think it's headed over 2020 and into the future.
Well, I think gold price is headed up. Now, I'm certainly not smart enough to predict the price, and I'll never put a projection on it. However, I feel quite strong in the fundamentals, in that I take a long-term directional bet. And that's why I start off by saying I think it's going up. I don't know if it's going to be 1650 or 17 or 2000. In the short term, all bets are off. You can have a fat finger at a hedge fund and it goes down $100 tomorrow. Obviously, this interview being obviously in the context of what just happened, gold's now flirting with $1,600. Last night, it shot up beyond that. Geopolitical reasons like what's going on between the US and Iran, that always has the potential to shoot it up. My long-term directional bet is not based on geopolitics. It's based on monetary. I think that's where the real upside is. That's why I think gold demand is going to soar. And I also think there's supply issues, and ultimately there's going to be a new equilibrium on price.
Excellent. And so you're talking about rising gold price. Could be attractive for some to want to just buy gold itself, sort of sit on the asset. But you know, our view of Capital 10X is miners over metals. We've said it a few times, but I'd love to hear your take on that.
Yeah, sure. Well, if you're going to buy gold, you're buying it for a completely different reason than you're buying the miners or the juniors. Gold is a great insurance if you're going to buy the physical. And if you want physical, if you want that risk protection, don't buy the ETFs. Buy the physical metal and store it under your mattress or somewhere you have access to it. That's a completely different bet. If you want to make money, invest on the miners, right? But if you're investing it for insurance, don't buy Barrick. It'll be treated the same as any other equity. I'm in this business to make money. Obviously, I do believe in having some insurance, but my primary reason is to make money in this industry. And that's why I believe, like you, in miners over metals, because you get leverage. Gold price is up, 10, 20, 30%, maybe not 30, but it's been up substantially. But if you look at the JDXJ, they've been up more. So, by our calculations, 2.5 to 3.5 times, depending on your miner. That's the leverage you always get in the miners. More specifically, if you want to get even more leverage, you go up the risk curve towards the juniors. We haven't seen the juniors really pop yet. I mean, there are exceptions to the rule, but by and large, if you want to use the TSX Venture Index as a proxy, it's kind of been flat. It's changing. It's coming up. So we're getting that lift, but it takes time for the mechanisms to filter down.
Right. And so you guys, in just great segue there, you guys Orefinders released a press release talking about the opportunity in junior gold miners, especially in 2020. Do you want to talk in maybe a bit more detail about how they've lagged, how much you see them lagging, and why you think 2020 might be a year where you see a lot of breakout?
I think the lag stems for the fact when gold price goes up initially, like it did back in June 19, it's about cash flow. And it's the miners that realized the extra $200 in mining an ounce, that flows directly to the bottom line. We saw those results come through in their financials in Q3 of 2019. And that's what the first wave of capital chased, and rightfully so, because these guys are making more free cash flow. Now, the question becomes, what are these miners going to be doing with that free cash flow? And I think, and that memo that we did release, I believe it was December 30th, it's available on our website. We talk about, this dilemma. Obviously, the narrative has been, don't repeat these mergers and acquisitions of yesteryear, the past cycle. A lot of heads were chopped and a lot of bad decisions were made. However, they didn't do it because they thought it was fun. They did it out of necessity. And I don't think this time is any bit different. Mining is a depletion business. And especially over the last 5-6 years, there's been a dearth of exploration and development. People have been deferring these costs, high grading their assets. M&A hasn't really been there. And on top of that, there's a systematic supply issue in the sense that we're just not finding these
Yeah.
deposits anymore. And when you do, it's lower grade and it's deeper and more expensive to extract. So my thesis is, which we lay out very clearly on all of our material, is that there's just no other realistic alternative short of some swan event. There's no alternative other than M&A, because that's how this industry survives.
Excellent. And so looking at the junior miners specifically, if you're an investor that's coming into this space, you follow the same thesis that we've just been outlining. What should you be looking for in a junior miner?
First thing is management team. It's just as simple as that. You have to go to a team that is credible. Now, of course, how does one define who is credible? That's, I guess, $1 million question. We just went through an experience with call it a hostile takeover in 2019 with another company called Mustango. Not to get into the details there, but I think that's a perfect example of how investors lost a lot of money based on a management team. It had a fantastic asset. It still does. But it languished under call it a dormant management team for years and years and years. And the trick was, how do you get out from under that? And we did a lot of the heavy lifting. We got it out. We now are in de facto control. We're the largest shareholder of that company, and we're going to be realizing value on that. So as I digress, the most important thing is people, because bad people can screw up a good asset. Then the next is, a close second is going to be the asset. You look for grade, you look for size, you look for jurisdiction, you look for metallurgy. There's no stopping the number of variables. But if you have the right team, and you do need a team, a full complement of people, you can solve these problems, because I guarantee you and I assure you that building a mine, and these things are built, not discovered, you're going to face countless problems that need to be solved. And layer on top of all the technical problem solving, you need the access to capital to fund people and the solutions that they're ultimately going to come up with.
Excellent. Well, that's perfect. I appreciate the explanation. Just want to wrap things up. Do you want to give our followers a bit of an introduction to Orefinders and just highlight maybe a couple catalysts coming up for 2020?
Sure. Well, Orefinders, I view Orefinders as a platform for gold investing in the Abitibi. We've really focused ourselves in that jurisdiction. We're focused on gold. Over the past 5 years, we've built up a platform, a portfolio of assets, both equity interests in other companies, but really more about acquiring really great projects at fractions of their value that has been spent in the future, and certainly fractions of the value what we anticipate them in the future. That has been our business model, and for the past 5 years, playing the cycles, because I think that's the best way to play a down cycle. In that article or memo that you referenced, we sort of announced that we're going to be pivoting back to the drill bit, and we are explorationists at heart, and that's how you really make the 10x, the 100x is through that Lassonde $1 billion drill hole, and that's ultimately where we're after. I think the most interesting, if I had $1 to spend, I'd spend it on my Knight project. It's in the Shining Tree District of Ontario. We recently announced a drill program there on 3 well-defined targets. There's lots of gold in the system. We sit right on top of a 4 million ounce asset. Our Knight project itself, which is wholly owned, hosts some of the highest grade intersections in Canada. So we're going to look to develop and grow that. I think that project in and of itself has the ability to make it to be a.
Excellent. Well, I appreciate that. And I'm sure investors will take a look and hopefully they see the same upside that you do. Thank you very much for taking the time to chat today, Stephen.
Pleasure. Thank you, Evan.